Welcome to Listen to the Market for March the 6th. Whilst I've been focusing on the top-down approach, being the 60-minute, 30-minute and 15, I think a change of pace may be in order. On the screen you see 6-hour charts of the Euro, Apple and the E-mini, the mini S&P, the favourite little vehicle that a lot of you, I'm sure, are out there punting on. Now why 6 hour? Well, the 6 hour I call a bread and butter approach. There are just 4 rollovers per 24 hours, so lifestyle-wise it's very low impact. The markets move slowly, the setups unfold in front of your eyes, and you have plenty of time to go through your manual, check to see whether you are seeing and whether the setup is in accordance with the rules. You can work out your bet size, you can work out your initial stop loss, you can write down your campaign management and go and kick some goals so you can actually earn as you learn and profit from patterns. So what was the setup that was there on Tuesday? And again, Monday's highs are marked on the chart, Monday's lows are marked on the chart as per normal. The first setup in through here, 11 AM my time, well and truly outside the optimal time window, was a FIP sell as well as an S3D sell. So 2 setups, both signaling a short. From an entry in through there, through to a stop out through there, there was about 7R to be had, just over 7R to be had. Had one gone to the extra, not really, but the extra work of applying the S3D concept to its fullest, the return that was on the table was just over 9R. So the difference being 2R. 2R a week times 50 weeks? Is that worthwhile throwing away for a bit of extra work? Only you can answer that question. So what you saw was a really nice textbook example, well and truly out of sample. And when I say out of sample, the L.I.V.E setups were put together back in the 1980s. We're now in 2012 and they are still performing as well as nicely as they did way back then. Can't help myself, but there's a nice little gorb sell up through there, capturing that movement down. There's a RTV sell in through there. The market is just replete with examples of the L.I.V.E setups performing. In case you're wondering that you're dreaming or not, this last bar may be moving because this is being done live as the markets are moving. To the right, the middle chart is Apple, been in the news a lot of late, and I featured that, I believe, on the weekend. I always like to see what the market does, or what the market presents in terms of L.I.V.E setups, when there's been a dramatic move that everyone talks about. And clearly with Apple up the top there was a gorb sell that was then reinforced in the idealized sequence with an RTV sell way before the fall happened down from grace. Moving across to the E-mini. The top here was marked with an SBS 3D sell and a gorb sell preceding the fall down through there. 2 more bites of the cherry in through there, being an RTV sell down through there. And then yet another sell set up in here being a completed promise sell, and a promise sell has 3 parts to it rather than just one. And there was also a gorb sell that allowed one to capture the bulk of the movement down and being stopped out just in the last rollover. So what I'm really doing is saying, hey, step back. Maybe you don't need to be working with small time frames. Maybe you don't have the right temperament to be working with small time frames. Small time frames are great to speed up a learning curve, but then you need to come to an understanding of yourself, your goals, your psychological makeup, as to determine what is the ideal time frame for you to work with. I'll be spending some time on the weekends Q&A addressing the issue of, in my mind, what are the best time frames to work with and when. So that's it from me for now. A really quick one because, hey, the markets are simple. The markets are easy. We humans are the ones that make them hard. So that's it from me. Over and out. Catch you next time round.